Alright traders, I'm back again with another video, and today this is just going to be a retake of the Trading with Ichimoku webinar that we held last week. The video recording didn't come out as well as we would have wanted it to, so we're just going to do a retake on this and see if you guys can pick up on anything here. So we'll get started with that. Alright, so let's look at the risk disclaimer here. This is my risk disclaimer. Just letting you guys know that basically everything that I say and talk about is for training purposes only. I'm not advising you to take any trades, and if you do take any trades, I advise you to consult your broker or your financial advisor before placing any trades that I may be talking about. Alright, so each trader basically begins his day pretty much the same, and for about 95% of us it's going to be like this. We get up in the morning, we all do that, right? We all wake up in the morning smiling and happy and ready to get started, right? And then we hop in the shower, get dressed, grab a cup of coffee, and then we head to the casino. And this is where it gets different for a lot of us. All right, so you could see the masses going to the casino, and then the masses start gambling. And when you're gambling, you're hoping. And when you're hoping, you start praying. And you're praying because you're losing. And when you're losing, you're depressed. Alright, and when you're depressed and you get done at the end of the day of doing the same routine over and over every day, you go to bed and your spouse is mad at you, looking at you like she wants to kill you. Alright, because you done lost all that money. But guys, have no fear, because the game is unforgiving for those who fail to learn. Alright, but like I said, have no fear. Ichimoku is here to the rescue. Alright, so what is Ichimoku? Ichimoku is a high probability, low risk profit trading system. Basically, it was developed by Japanese journalist Goichi Hosada. Goichi Hosada developed this in the late 1930s, and he released it to the public in 1968. So basically you could see he really took about 30 years to master this system and then put it out to the public. So with all that back testing and studying this system, I see no reason for me to change anything that he's done, that he's made. So I keep everything pretty much the same. I don't change the default settings really. I mean, I've shown where I have, but basically when I'm trading Ichimoku, I'm trading the default settings because this guy's traded it he's developed it. It took 30 years to develop it, and I haven't traded it for 30 years, so I know that he knows what he's talking about when he put this thing out. Alright, so Ichimoku translates to one glance equilibrium chart. So basically you could see at one glance what's going on with this chart. And your charts equilibrium is going to be a big thing about trading Ichimoku. To me, it's one of the biggest things because equilibrium is going to be basically just like your stochastics and your MACD, all your other indicators that are showing you oversold, overbought. That's the same thing Ichimoku is doing. Alright, so what is equilibrium? Equilibrium is a state of stable conditions in which all significant factors remain more or less constant over a period of time, and there's little or no inherent tendency for change. So for example, a market is said to be in equilibrium if the amount of goods that buyers wish to buy at the current price is matched by the amount of the amount that sellers want to sell at that price. And this is also called steady state. So this is a market in equilibrium is what is an ideal market. That's a market, an efficient market, because you don't have people sitting on the sidelines. You don't have all buyers or all sellers. You have a mixed amount of buyers and sellers. You're getting all the buyers and sellers because the price is equal for both of them. It's fair for both of them, so they all want to be in on this. Alright, when one thinks it's not fair, then you don't have them participating in the market. Therefore, it's not an efficient market. You want an efficient market because that's where everybody is in the market. So market equilibrium, situation in which the supply of an asset is equally or exactly equal to its demand. So since there is neither surplus nor shortage in the market, price tends to remain stable in this situation, though creating equilibrium. So equilibrium is supply or demand, oversold, overbought. That's when the market is not in equilibrium. Excess supply, excess demand, you're not in equilibrium. All right, so how can this help us? How can this equilibrium thing help us? How can Ichimoku help us, basically? Basically, it's going to help you to stay in the right direction and not go in the wrong direction. It's going to help you to make the right decisions and not the wrong decisions. Okay, so Ichimoku is going to help you to decide the proper way to trade, the higher probability way to trade, and it's going to help you to take the higher probability trades. All right, so we'll look at the components of Ichimoku, and then we'll talk about some of these trading systems, some of these trading strategies. All right, so I know these. When I look at Ichimoku, I learn everything about Ichimoku, and when I learn it, I learn the exact name, what these components are called. So these components, 6 components that we're going to look at, and we'll be able to break them down to 4. So the Tenkan-sen, also known as the conversion line, I know it as the Tenkan-sen, but others may know it as the conversion line. This is calculated as the highest high and the lowest low of the past 9 periods divided by 2. It's the fastest component of the system. And then you have the Kijin-sen, also known as the reference line. It's the highest high and the lowest low of the past 26 periods divided by 2. Now this Kijin-sen is going to be very important for us. This is going to be our this is going to tell us when the market is in equilibrium, because the market's going to want to pull back to this Kijin-sen. We'll get in deeper to that in a minute. Chiku span, also known as the lagging line. This calculation is the current price shifted back 26 periods. So basically it's the current price as you see it, but 26 periods behind. So where would 26 periods behind be where current price is right now? Will it be higher than the period of 26 periods ago, or lower? Or will it be right with that current price? This helps us to know a lot of things, because if we're right with the current price of 26 periods ago, then we pretty much haven't moved, right? We're still in a straight line. Our market is pretty much in a ranging level. But if 26 periods ago is back here and we're up here 26 periods later, then we're moving higher. Or if we're lower, then we know that we're in a downtrend. So this is how Chiku Span helps you. You don't want to trade a market, since Ichimoku is for a trending market. You don't want to really trade a market that's in a range with Ichimoku. Chiku Span is going to help you to stay out of range trades that are ranging when the market is ranging. Sync-out span A, also known as the leading or preceding line 1. This calculation is the Tenkan-sen and the Kijin-sen divided by 2, plotted 26 time periods ahead. This is very important. You see, this is 26 periods behind. This is 26 periods ahead. Ichimoku is calculating your past, present, and your future. Now, it's not telling you where future prices will be, but it's telling you where future support and resistance levels may be. All right, so that's also very important for you. So Ichimoku is the only indicator that can tell you help you with showing your past, present, and future. All right. And then you got Sync-out span B, also known as the leading or preceding line 2. The calculation is the highest high and the lowest low divided by 2, calculated over the past 52 time periods, shifted 26 periods ahead. Now I know I said a mouthful there, so we'll look at that and see what this is all about. But this is 52 time periods ahead. It's the fastest, the slowest component of the Ichimoku system. Therefore, this is where you'll see a lot of the cloud, okay, because when we talk about the Kumo cloud is the shaded area between sync-out span A and B. So you really don't need to know span A and B. You just need to know the Kumo cloud. But with span B, usually this is going to be the where you see the flat lines on the cloud, where the cloud is flat, where there's a lot of support and resistance. That's going to be sync-out span B. Span A is normally never flat. It's normally moving. If it's flat, it's not flat as span B would be. Span B, since it's the longest time period, you'll see it flattened out more, and that's where you see a lot of support and resistance. All right, so the Kijin-sen, this is going to be our main man here, because this is our our line, our level of equilibrium, and this is where we're going to want to be making most of our trades. We want to be close to this level because this level is going to be important for us, because the market likes to come back to this level. If the market's far from this level, we don't really want to be getting into trades, right? So as I said, the calculation is the highest high and the lowest low of the past 26 periods divided by 2. So it's the midpoint of the past 26 periods. So it's the equilibrium of the 26 past periods. It's midterm bias. Okay, it's medium term support and resistance. It's medium term momentum. It's a built-in trend line. If price crosses this line, it usually indicates a possible change of trend direction. So therefore, you can see how important it is. We can use it as a trend line. It tells us our momentum, its support and resistance. We can use it as a trailing stop. It adjusts with the market volatility, and it's a magnet to price. So this is the market in equilibrium when it's near the Kijun-sen, and the market's in disequilibrium when it moves farther away. So this is very important also. This helps us decide if we're oversold or overbought, basically like your other indicators such as stochastics and RSI and things to that nature. This is used with the Tinkinson to create your TK crossover signal. That's going to be one thing that we talk about today. Or it can be used alone to trade your Kijun-sen bounce. Okay. So here we go. This is the market in equilibrium because it's right on this line here, right on this Kijun-sen. This Kijun-sen is attracting the market. This is when the market's in equilibrium. The market's pretty much in a range here. Then the market drops, starts to go into excess demand, gets farther away from the Kijun-sen. Here you can see this Kijun-sen level here. The market is higher. So this is excess supply. So when the market's too far from the Kijun-sen, it's disequilibrium. We don't want to trade while the market's in disequilibrium. This will help you keep you out of bad trades, because a lot of times the market wants to pull back to this level and then go again. So if you're patient and wait, you can get a better trade. Here again, here's your Kijun-sen. The market is far away from the Kijun-sen, far below it. So that's excess demand. That's disequilibrium. We wait for the market to get close to the Kijun-sen before we make a trade. All right, so we're going to talk about the Kumo Breakout trade. This is a trade that I've been talking about pretty much a lot of times on the YouTube trading videos that I post. Pretty much I could trade this Kumo Breakout trade non-stop the whole year, and the only trade that I make, and I'm sure I'll be profitable, because it's probably it is the trade that I use the most. So it's something that I'm always looking for. So I can trade this, and I don't need to trade any other trades, and I'm just sitting patiently waiting for Kumo breakouts. But let's go over the Kumo breakout rules. All right, so price needs to break and close above the Kumo, and it must be the first candle out to be the Kumo breakout. Other than that, it's going to be a different type of trade. All right, because we want to get the breakout while the price is moving, has the momentum to break through the cloud and continue moving. We don't want to wait for other candles, because then we're going to probably call it something else. It'll be a different type of trade. Price needs to close above the Kijun-sen. So we need to be above that Kijun-sen. This is, like I said, your trend line. So if it's your trend line and you're going long, you don't want to be below that level, right? You want to be above that level. So you definitely want to be above the cloud, and you want to be above that Kijun-sen. Then you need a bright future, and we'll talk about that. That's your cloud. That's going to be the change of your cloud. So it'll be a bright future, or your Kumo twist. And then your Chico span needs to be above the price. All right. So my stop loss is going to be at either the breakout candle open, the Kumo top or bottom, Kijun-sen, or the fractal level. All right, because we're going to use fractals in trading with Ichimoku. Fractals are very important in my type of trading, so I use them for a lot of different scenarios. And then our exit is going to be at price close below the Kijun-sen, or price close below that bear fractal. So when we're going long, we can use these bear fractals as we can use them as a stop loss, okay, or we can use them to exit the market. Basically, it is a stop loss. So once it gets there, boom, that's it. And then your bear rules will be the same but opposite, okay? So you could look at that, and that's what you're going to do for a bear trade. So let's look at some of these Kumo breakouts. Here's a Kumo breakout, first candle out, boom, breaks out. This has to close above. It's not a Kumo breakout if it doesn't close above. All right, because you could see one, two, three, four candles here did not close above, so they didn't break out. And what if they never did? It wouldn't have been a breakout, but you would have been in the trade, and the trade wouldn't have went your way. But this candle closed and broke above. Now your Kumo twist, your Kumo future, that's going to be this. So 26 periods ahead of that, which will be 26. You can take your little ruler if you have that on your software and watch 26 periods ahead. But this is always going to be 26 periods ahead of you anyway, so you won't need a ruler or anything. This is what you'll see. You won't see all this. So when this candle was at this point, we already had this happen here. My future, I can tell what my future is, dark or bright, based off of the color of my cloud. When I enter a trade, if I'm entering a long trade, I want my cloud to be blue or have crossed over just to turn blue. That's going to indicate that it's a bright sunny day. So there you go, the blue cloud. The darker cloud is going to be a stormy day. We don't want to trade that long. We want to trade that short. Okay, so if it's this color, this tannish color, that means we're bearish. This blue one means we're bullish. So I had the breakout. 26 periods in the past is where Chiku span would be. You don't see it on my chart, but Chiku span 26 periods in the past would be back here above this current price. So there we take this long trade, and there's no reason to get out of the trade. There's a lot of reasons we can stay in the trade. A lot of traders will get out here, but if you follow the market structure, you're going to be safe most of the time. The percentages and the odds are with you if you follow this market structure. And the market structure is based off of these fractals. Here's a bear fractal, here's a bull fractal. This is a double fractal. But if I'm looking trading long and I use a bull fractal as a stop loss, you can see the market never goes below a bull fractal. But then once it does, then the change of direction starts. All right, and then it's crossed over my Kijinsen. So I don't have to get out of this market until I get to this, till the market gets to this level or this level. Now, quite naturally, guys, when you're trading with one lot, this is very hard to do. So therefore, I'm talking about when you're trading with more than one lot, because yeah, you're going to get, you don't want to let this move up 100 pips and then come all the way back and take you out for like 30 or 40. So when it moves up to a certain level, and you have to decide how you want to manage your trade. But basically what you could do is, if you move up to 50 or 100, maybe you take a few lots off. All right, and then you let, that's when you have, after you take profit, then you have to learn to let the rest of this run with this Kijinsen, run with these fractals. All right, so if you're trading one lot, you're probably going to take it out somewhere once you get a certain level and you get scared and you just take it off. So it's kind of hard to develop that discipline with just one lot. You start developing that discipline when you can trade with more than one lot and take profit and then allow the rest to run. Then you'll start learning to trust this system. All right, so here's another breakout. Kumo breakout here, boom, first breakout. The cloud twist, you got to change the color. 26 periods in the past, you could count 26 candles back. Kijinsen, Chiku span is going to be above this price level. And then you have the breakout and the market moves like it's showing you. Novices probably get out of this trade here because you could see the market reversing a little bit. This is a little pullback. We know the market structure. We know how the market does. The market, when it's moving in up or down, it's always going to retrace or pull back a little bit. And that's what this is doing. So if I follow these fractals again, or I follow my Kijinsen, I'm in this trade, no doubt. Okay. And as the novice exit here, I'm still in this trade. Maybe I took some profit here. Maybe I take some more somewhere else, and then I just continue to let the trade run. Again, Kumo breakout, 26 periods in the past. Chiku span would have been below this price level. Now I do take in consideration if Chiku span is inside this cloud, but I don't let that stop me from taking a trade. The main thing I want is Chiku span to be below the price or above the price. It was below the price in this instance. We're below the cloud, and we're below your Kijinsen. The main things we want, and we take this trade. Now in a bearish trade, we're going to worry about the bull candles. So if price comes above a bull, a bull fractal. So if price comes above a bull fractal, that's where we're out in the market, and it would have been right here, or when we go above the Kijinsen. So you would have got out earlier with your fractal, but if you waited on your Kijinsen, you would have gotten out here. Now all this here, guys, there's another way to get into the market using Ichimoku. We would have been back in this market, and we continue to trade down to this level. All right. So you're not going to catch all of this 675 pip total. Not on this trade, you wouldn't have, but you would have caught a lot of it, and then you could have caught more on the entry. So another bear breakout. I know 26 pairs in the past where the Chico span is, therefore it's not on my chart. That helps me to keep some things off the chart, keep the chart a little cleaner. And then you could see this 765 pips. There was a possibility of catching all of that, because now in the bear market you don't want price to close above a bull fractal. So you just continue with that. You have your stop here, now you have your stop here, now you have your stop here, and now you have your stop up here. And then you continue to move your stop with the fractals. And then price never closed above your fractal. Price came down here, put your stop at this fractal. Market closes above the fractal and the Kijinsen. You're out of the trade. This looks easy on the charts and everything, and I'm sure you guys are like, yeah, it's easy on the chart. That's right. It's easy when you're looking at it, but it's harder when you want to try to do this. That's why I'm talking about learning to trade with more. When you're trading with more than one lot, you can do this. With one lot, yes, definitely. You're going to really probably not even be able to do this. Another bearish breakout. Broke out right here. 26 periods in the past, Chico span would have been below the price and below the cloud. We're below the Kijinsen right here. That's what we want. We want price to be below the cloud and the Kijinsen, first candle out. And we take this trade and we follow these fractal levels, guys. And then you follow your Kijinsen. Breaks above Kijinsen here, we're out of the market. There's a whole bunch of ways to get back into the market in this area here. And that goes into deeper into trading Ichimoku. But this basic stuff that I'm showing you here, this is going to catch you a lot of profit. And again, you won't catch that 1,045 pips, but you can catch more than half of that. We could get back into the market here. We would have been back in the market here, and we would have followed this all the way down. And my course will teach you how to get into this market here. If you look at our home video course, this will help you to learn these other trades that you want to use to get in back into the market. All right, so here's another bearish Kumo breakout here. First candle out, novice exits on 58 pips, but we continue to go. We never get out because we never closed above Kijinsen or the fractal. Here's a fractal level, the first time the market ever closes above it, right here, 770 pips later. All right, so you can see. And then the market goes in up the other direction. And look at the structure of the market. You're never breaking bull fractals, but once you break that bull fractal, you're starting to go in another direction. The market starts with a fractal. A trend starts with a fractal here, and it ends with a fractal here, and goes the other way. And then look at our trend line. Our trend line, we stand below that. We break our trend line. Look where we're going. So that was the Kumo breakout trade. That's a trade that we can trade all the time, and we don't have to trade anything else. Okay, and you'll be profitable, trust me. You'll have to be patient because you'll have to wait on those trades. So that's how Ichimoku is going to help you. One way is to wait on your trades. So you can't trade something that's not happening or not there, so you'd have to wait on that Kumo breakout. So now we're going to look at the TK crossover trade, and this TK crossover trade, this is one that I don't trade, and I'll tell you reasons why when we look at the chart and stuff. But I have made one trade, probably just one trade this past year with the TK crossover, and I'm going to show you it. And I'm going to show you why I don't enter these trades, but when you got an opportunity, you can enter these trades. I'm going to show you why I like to enter them at a better level. Alright, so here's your TK crossover trade, and when you get this TK crossover signal, it's going to matter where this happens. This TK crossover signal is when your Tenkan-sen and your Kijinsen cross each other. So it's going to be a bullish signal when your Tenkan-sen crosses your Kijun-sen from below to above, and it's going to be a bearish signal when your Tenkan-sen crosses your Kijun-sen from above to below. Remember, your Tenkan-sen is your 9 periods, and your Kijun-sen is 26 periods. So Tenkan-sen is going to be faster, and it's going to be moving more with price. All right, so once it crosses over that Kijun-sen, that's when we want to get into a trade. Now, wherever that crossover happens depends what kind of strength it is. All right, so if you get looking for a long trade, and this happens above the Kumo cloud, it's going to be a strong signal. If it happens inside the Kumo cloud, so if you get that crossover inside the cloud, it's a neutral signal. And if you happen below the cloud, that's going to be a weak signal on a bullish crossover. Now, if it was a bearish crossover and the signal happened above the cloud, it would be a weak signal because it happens up in bullish territory. Bullish territory is up above the cloud. Bearish territory is below the cloud, and bullish territory is above the cloud, and no man's land is inside the cloud. So no matter where the signal, no matter what kind of signal it is, if it happens inside the cloud, it's always going to be neutral strength signal. And then if it's a bearish signal happening below the cloud, that's instead of here now, it's going to be a strong signal because it's bullish below. I mean, yeah, sorry, it's bearish below. Bearish below is going to be a strong signal. Bearish above is not going to be a strong signal. It's going to be weak. All right, so I'll show you on the chart so you're not confused with this. So here we go, just talking about the TK crossover, and it's probably the most well-known trade setup of the Ichimoku system. It's pretty much the same as moving average crossover signal, except moving averages are normally based off of the closing price, where the Tenkan-sen and Kijun-sen are based off of the highest high and the lowest low over a period of time. So this signal identifies the momentum is shifting in one direction and that a strong move is likely approaching. A buy signal is generated, like we said, when Tenkan-sen crosses from above, and a sell signal is when Tenkan-sen crosses above to below. All right, so as with all this system and trend following systems, basically the signals work well when the market is moving or trending, and it's not effective when we're in a range. Okay, this can be used on any time frame, but again, it's better suited on the higher time frames. I use 4-hour and daily. I probably wouldn't go much lower than the hourly time frame, but you can trade it on any time frame you desire. But what happens is when you're trading on the lower time frames, you're going to have more fake outs, more false signals. All right, more signals that aren't as valid. And a lot of times you don't want to see that Kijun-sen flat, because when that Kijun-sen flat, that lets you know that the market's ranging. And when you have crossovers, you're going to be whipsawed a lot. So here's my TK crossover rules. So for a bull trade, I need price above the Kumo. I need a bright future, so my Kumo twist. I need Chico span to be above the price. So this is the same for pretty much all of the signals. You have all 4 of these you need, and then enter when your Tenkan-sen crosses your Kijun-sen from below to above at the candle close. Okay, don't do this while the candle's still active. Wait for that candle to close, because I've seen a lot of times where that candle didn't close and it became a pin bar or something. All right, your stop loss is going to be, this is going to be for me all the time the same thing. My stop loss is always going to be the Kumo top or bottom, or the Kijun-sen or the fractal level. Okay, always going to be one of those for me. And then you're going to exit. Again, this is always going to be the same on every type of trade I make. It's going to be a TK cross, price close below the Kijun-sen, or price close below the fractal. Now the TK cross signal is not going to be for me normally, but when you're trading a TK crossover signal, if you get a reverse of what you just had, then you don't want to still be in the market. So if you got a bearish crossover when you just entered on a bullish crossover, you definitely want to be out of the market, right? So then your bear rules are going to be pretty much the same again, but different. So here they go. You can look at those and trade those. So these trades we're talking about today, you can learn these really quickly and start them right away. So here's the TK crossover. This is your TK crossover right here. You can see the green which is your Tenkan-sen, crossing the blue, which is your Kijin-sen. That's a moving average crossover basically. 26 periods ahead, this is going to show your future. You would only see this part here, you wouldn't see this. And my future was bearish. I have a bearish crossover. Look where it happened. It happened below the cloud. That means it's a strong bearish crossover. You enter when that candle closes. You want to make sure that candle closed. All right, and then your Chiku span below the price of 26 periods back. And then you could take this trade, and you would still be in this trade today. Here's another crossover. This crossover is the same as the previous one, a bearish crossover. This one's strong, right? This is a strong signal. This is a weak signal. Why? Because it happened above the cloud. But it's still a bearish crossover, and it crossed over here. So you enter on your candle here, and then 26 periods ahead, my future was bearish, so I can enter the market, and you would have been in this trade until here. And you see Chiku span 26 periods back was below price. That's what we want. Now it was inside this cloud. I don't allow it to stop me when I don't allow the cloud to stop me. I'm just aware of it because the cloud can reverse this market. All right, so just be aware of it. Now here you can see a lot of whipsaws because look at the Kijinsen. It's flat. You got a whipsaw there, a whipsaw here because you got a crossover here, crossover here, crossover here, another crossover. But this is what's going to keep you safe is this Chiku span. You get a crossover here and it's a bearish crossover. Chiku span was inside price. You don't take the trade. You get a crossover here and it's a bullish crossover. Chiku span was inside price. You don't take this trade. You get a crossover here. Chiku span was above price. This is a bearish crossover. Chiku span's above this price right here. You don't want to take this trade. So Chiku span is going to help you to stay out of some of these bad trades. Alright, so here's another trade. We've got a TK crossover here. It's a bullish trade, but it's a neutral strength signal because it happens inside this cloud. If it would have happened up a little bit higher, it would have been considered a strong signal. Now let's go back to Chiku span. Look where Chiku span is. It's inside this price when we're trying to enter a long trade. It's inside this price, so we don't want to take this trade. It means a ranging market is expected while we're inside this price. And look what happens. Here's your crossover, and then the market stays in this range, and then the market goes, and here's Chiku span. It goes, and then this goes. So we wouldn't have traded TK crossover. Now we can enter the market on a different type of trade. So we wouldn't have entered this TK crossover trade. Now we'll look for a different type of trade, and we could have entered the market exactly here at the close of this candle, and we would have been in the market. Now here's why one reason why I don't like to enter the market with a TK crossover, okay? Because here's a TK crossover. This is a strong bullish crossover. All right, because it's a bullish crossover happening in the bullish territory, which is above the cloud, no man's land, and then bearish territory. So bullish crossover in the bullish land, strong. All right, and then you can see Chiku span back here above price no matter where. So that means we can trade this long. We have the crossover here, so we enter the market right here, right? Well, look what happens. The market goes up a little bit, but then the market drops. The market's trying to get back into equilibrium. When the market's too far away from Kijinsen, I don't like to enter these trades. And a lot of times when you get a crossover, here's one crossover. Look how far away from the Kijinsen price is when this happens. And then the market ranges for a little bit, then you get a crossover. And then look where we are, a little bit far from Kijinsen. So the market comes back to get back in equilibrium. Therefore, I don't take this trade. You know, every good trade is not a good trade. So every good setup is not a good trade. Just because you have a good setup doesn't mean it's a good trade. This is not a good trade because it's too far away from equilibrium for me. I want to be right next to this level when I trade. Alright, so therefore I let this go, and then I enter this market in a different type of a trade if it happens. Alright, so here is a trade that I did enter. This was a TK crossover, the only one I entered last year, and I'm going to show you it. Here's the crossover. It was so close to Kijinsen that I had to take this bullish crossover, strong signal, Chiku span above price, confirming the entry. I had a future which was bright, and there's my crossover. This was only 15 pips away from Kijinsen. Therefore, I usually like to have about 30 pip stop loss. So I moved it down 30 pips. It kept me below these fractal levels here. So let's follow this trade out. So here's the trade. And as I told you, I moved it down to 30 pips. 15 pips was right to here. 30 pips is down to here. So I like to have about a 30 pip stop loss. The market came back, closed below Kijinsen, and then went back again. I kept my stop loss where it was. Didn't matter about price closing below the Kijinsen because I kept my stop loss. I don't get out of my trade or stop anything. If I set my stop loss, that's it. Then the market started to move. Here you can see the market started to move, got up to this support and resistance level. We broke that level, 38 pip profit still. The market started to move up, broke this other support and resistance level right at it, 68 pip profit. And then, guys, here's very important. Look what happens. The market retraces. Where does it retrace? All the way down to this Kijinsen. Look where my stop loss is. Right below the Kijinsen. Because here's where I entered the market. Okay, here's my entry right here long. And then I'm already in profit, so I stayed below the Kijinsen. I could have used the fractal. I would have been taken out here. And luckily I used the Kijinsen. I probably was asleep anyway and saw that when I woke up this was already like this because you could see my stop loss. I never touched it. And the market didn't take me out. It hit right on Kijinsen. That lets you know how important Kijinsen is. Look at what it does. Bounced right on it and then pushed way ahead. And then we're in the market still for 78 pips. That should tell you guys how important this Kijinsen level is when you have a spike like that off of that level. Then finally 121 pips right here. Market's still going. Here's where we once were. This was right here. So we were here, then the market came back again. Now I was asleep here, woke up, and the market was going. Once the market was up here, my stop loss, look where my stop loss is, above Kijinsen. Alright. And then 147. Pretty good trade. Just followed that out. So 149 at that time with that crossover. Price was only 15 pips from my Kijinsen. The stop loss was 30 pips. So where we are now, that's 5-to-1 R&R. That's a great trade. If you could trade like that all the time, you'll be a millionaire. You'll be great to trade. You'll be a great trader. But you're not going to have that all the time, okay? This is the reality is you're not going to get that all the time. But that's a good trade there, and you can get a lot of these types of trades. Here's a crossover happening. You could enter the market there. I got on this crossover, and then here's a crossover. You can enter the market there. Alright guys, so look at here. Here's a TK crossover. It's a bullish crossover, and we'll consider it neutral strength because it's right on the cloud. Price is above the Kumo, it's above the Kijinsen. Chiku span's above price. So is this a good or a bad trade? Is this a good breakout trade, or is this a good TK crossover trade? Any kind of trade. It's not a good trade because my future's still dark. Even though it's very close to happening, I still wouldn't have taken this trade because all of my signals are not bullish. This one is still bearish. Alright, so you need that to twist over and be bullish. So you could say, oh, it's almost there, but yeah, well, if it's going to retrace all the way back, you're sitting in a trade that you don't need to be in, losing money, and who knows what's going to happen with that trade. Alright, so let's go look at the live charts a little bit. I don't have much to show you on these charts because right now, guys, the market is pretty much doing nothing because we're right around the holidays. So I'll just show you some of the components and we'll look at that. Alright guys, so we're here back at the charts, back with the live charts, and one thing guys is I haven't been trading much this month, so you could see the market's not really doing much. You know, it's all over the place. There's not a lot of volume because pretty much a lot of the institutions and big banks, a lot of people are on vacation. It's the holidays. I'm gonna wait till the New Year's comes and then I'll really get back into trading. So I don't really have a lot to show you guys right now, but there are a few things I want to look at. And here we go, just looking at these crossovers. Here was a crossover here, and this is your Chiku span with it on the chart now. Usually I just have this Kijinsen on my chart. I know where the JK crossovers are, and you can just add it to your chart and then take it away. And I'll show you some of my charts again. But this was a crossover here, and you could see, but depending on how far away the candle is, I don't want to enter this trade because I always know that my main level where I need my stop loss is going to be Kijinsen. So therefore, if this is 100 pip stop loss or 80 or whatever, I don't want it to be that big. I want it to be more like closer to 30. So I'm going to wait and take what I want. I'm not going to take what the market's giving me. It's just like buying a car or anything else that you're going to buy. If you want to negotiate your price, you get it for your price. If they don't come to your level or down to your price, you walk away and you look for another dealer. Same thing with trading this pair. This pair doesn't want to trade at my level. I walk away, look for another pair, and go here. Maybe this pair is going to trade at my level. Maybe I can get it where I want this one. If not, same thing. You walk away and go to this one. Now I took a trade here, guys, and this was a different type of trade. I entered the market here, and I can't really get much into this trade, but it's one that we use on the home video course. Different trade here. It wasn't a TK crossover because you don't see any crossovers up until here. So the market was pretty much ranging, and then we broke through, and I took a trade here, and I got out of the market early because, like I said, there's no volume in the market right now with the holidays and the way things are with trading right now. So it's kind of risky trading. And then you have, here you go, pound Aussie. The pound Aussie moving higher. Now none of this is any other things that I've shown you guys, but we still looking for a trade here. We can look for a trade here off of a different type of a trade, and this would be probably more looking for a Kijinsen bounce. So you want to see, when we're trading Ichimoku, we have levels that we look for. All right, and we look for a lot of levels, and once we reach our levels, if price stops at that level and shows us that it's going to reverse on some kind of price action or something, then we enter the market. All right, but we don't see any of that right here yet, so we have to continue to wait. And if it violates this level, then we go to our next level, and if it violates that level, then we look for a different type of trade. But we have levels set up in Ichimoku that we're going to trade. Okay, so my levels where I would look to trade Ichimoku are here, here, and then down here. And then if I don't get any of these levels, then I know I'm going to be looking for something else because price is continuing to go lower. And as price continues to go lower, then I'm going to look for maybe a breakout, a Kumo breakout later. So you just have to be patient and wait on your trades. This is a, you can see my charts. I only have the Kijinsen on here. You don't see the Chiku span or your Tenkan-sen because I already know where the Tenkan-sen crossover is, and I know where Chiku span is because all I have to do, guys, is this: take my ruler, go back 26 candles. Here's 26 right here, 26 right here. So Chiku span is right here, right exactly where price is now, but 26 periods back. So we're in a range pretty much. You could see nothing really happening. We are exactly where we were 26 periods ago. So if we would want to be lower than this price level. Okay, so here's Aussie dollar 4-hour time frame. We're not looking at anything here. Again, I say we look for our levels. Price is moving closer to our levels. If it doesn't reach our level, we leave that alone. We go to another pair. Okay, so pound New Zealand, this is how quick we can look at charts. We're looking at something here. Maybe we're going to see a different type of trade here. Maybe we get a bounce off of the cloud. Maybe we get a Kijinsen bounce. So we have to wait here still. We're not sure what's happening yet. But I can look at this and know that a trade possibility is developing, and it may be the next candle. Here we're looking at a level for another trade. So looking at something to happen here. Now here, guys, I'm going to give you a tidbit on this one. This is something not Ichimoku wise. This is something that you guys should be looking at. Aussie New Zealand dollar. Look at these charts now, guys. Look at these very soon and make sure that you're aware of this. This is the all-time low for this pair. So what is the all-time close and open is going to be 1.05030, and then the all-time low is 1.04290. So anywhere in this area, guys, the bounce off of this level may be a possibly good trade long. Okay, because a lot of times, especially now with the market no volume, and there's a great possibility that this level holds. So you can look for a bounce off of this as a support level and trade this long. Now this is not Ichimoku wise, so we could even just remove this off the chart. This is just something that a lot of times you really want to look for. Price never has been back to this level before, not really. And even when it attempted to before, look what it did. Came way down and had a monster spike and then took off. And now again, it's back down to this level, bounced off of that level. Now if we can get a trade here off of a bounce here, this could be a good trade for you. So be aware of this, that you could get a bounce off of this and get a long trade and maybe be in this for a good profit. Now it's going to be hard to get into these trades. You know, I'm not going to tell you how to enter the market. You're going to have to decide how you want to trade a support level. But you could see what happens around that support level. But once you get into a good trade, look what really happened on this. Now that's the monthly time frame. So we want to trade this on the daily more than likely, or the 4 hour. But I'm going to show you, and then I could add an indicator here that's really going to help me. It's the ultimate oscillator. And what am I going to use it for? I'm going to use it for divergence. Okay, so we could see, look for some divergence on this, and we have slight divergence, nothing major yet, so I'm not getting a real great feel for that. Let's see what the 4 hour looks like, and then you could see there is more divergence on the 4 hour. You could see this is going upwards, so this divergence is where price is doing different than the oscillator, or the oscillator is doing different than price. So this is going up, right? And this is still flat at this level, or maybe even going a little lower. So maybe we can get a bounce. I want to see price come at right at this level, and then I'm going to start looking for something to take this long. So again, guys, this is not Ichimoku. This is just something. Now I do make a range. I make a zone, because this is going to be the all-time low level right here, but this is the all-time low open and close. So this level between these two levels is a zone. Now this is a pretty big zone, so you want to wait and see what's going to happen. Almost 80 pips or so, 70 something pips. So maybe you'll see, wait the market get into this zone and then trade inside the zone, or wait for a bounce off of this level. Maybe it bounces off of this level. So anywhere in here now, guys, just be aware of how you can enter this market. Okay, so that's just a little non-Ichimoku. And then back to Ichimoku. Nothing really happening here, but if I'm looking at Ichimoku, I do have a trading possibility. Now I have to wait for my candle to close. I want to see what's going to happen at this level here. All right, so US dollar yen 4 hour time frame. I'm not trading the TK crossover. TK crossover already happened. So now we're looking at a different type of trade here. And all these types of trades, you can learn this if you want to. Two ways you can learn this, and I'm going to show you. So here again, we're waiting on this. There's nothing here yet. So we have our levels where we want to trade. Nothing happening here. So I'm going to show you guys two ways that you could get involved with this stuff with us. All right. So when we talk about other ways of getting different types of trades with the Ichimoku system, we're looking at these other types of trades here. A TK crossover we talked about, and the Kumo breakout we talked about. We have the Kumo bounce. So those are some of the things I was pointing out on the charts, where we have our levels that we want to look for. Kumo bounce, Kijinsen break, or Kijinsen bounce, a Kumo twist, and a Chiku span cross. Now I don't trade all of these. Some of these are, to me, are really just a waste of time to even trade. So the main ones that you really want to look at are your TK crossover, your Kumo breakout, your Kumo bounce, and your Kijinsen break. are your Kijins and bounce. So these one, two, three, four, five, and then there's others that I trade also with fractals. So I have a fractal trade that we make. Two types of trades. We have an FFO trade, and we got just a regular fractal trade. So those are things that you could learn on my course if you decided to take the course, or you could come to our forum and learn those also for free. You won't learn all of those, but you'll learn all of these here. So, okay, so here's our forum, guys, and I'm going to show you some of the trades that other guys have made. This trader here is a very, very good trader, and you can see his trade. He entered this trade on looked like a Kumo, a Kijinsen bounce trade, and he entered this trade and he made 529 pips on this trade. All right, another trade that he's made, the trade that I showed you guys, Kumo Breakout, 230 pip profit on this trade. All right, so Kumo Breakout trade, 230 pip profit he's made on this. Again, another trade. This is a different type of trade, Kijinsen break trade. He's made 81 pip profit on this trade already, and I don't know what he closed out at, but this guy is a very successful trader in the forum, and you can talk to all these people in the forum and come into the forum and learn all this, and I'll show you that in a little bit. And again, you can see another trader here made another trade, look like a Kijinsen bounce trade, 80 pip profit right here, and the trade was continuing to run. So here's another trade, and a different trader, looks like he traded a Kijinsen bounce trade and 174 pip profit on this trade. And he's made another trade with natural gas, guys. So it's not just forex, he's trading natural gas here, 171 pip profit on this trade. These are all trades that you can look at in the forum and talk to guys about these trades in the forum. And this trade ended up 260 pip profit, natural gas. Okay, and he traded a different type of trade, natural gas trade again. I guess he's got two opens, 152 and 113, trading natural gas. All right, a euro yen trade, 166 pip profit, Kijinsen bounce trade. Here's a trade that I made. This trade here was the, what trade is this one? This was a different trade than the one that I posted and showed you guys. Yeah, this was a Kijinsen bounce trade here. So we're looking at this, and you can see pretty much I'm going to follow this trade. So here's this trade. You can see I entered the trade, and then price is going. I took 110 pip profit. All right, and then I closed the trade at 379. So I took 110 with some lots, and then I let the rest run to 379, and I closed it on a Friday because this candle was pretty much the closing on a Friday. Looked like a little pin bar, and price may retrace. So I just got out of this trade, but others were in this trade, and look how they did. It's the same exact trade. This guy traded the same exact trade, entered when I did, because we post these in the forum. He closed one trade with 198 and then closed the rest for 441. So he really did well on that trade. You could see I closed for 379 and 110. He closed for 198 and 441. So a fantastic trade. So if you want to if you'd like to just get involved with kind of trades like this and get into this forum, this is free right here, guys. You could get into this. Just go to the fx@oneglance.com. Click on this link right here. When you click this link, it says Chaos Trader 63 forum. Click that link and it'll take you right here, and you just register for free, put a username and a password, and boom, you're in. And you could see at that time we had 607 total members, guys, and we got over 6,000 posts and 672 topics. It's even more than that now. So, and when you enter, once you register and put your username and password, it'll take you here, and you'll see all this. This is where we, talk about our trades and analysis right here. This is where you can learn about all the components of Ichimoku. Anything you want to talk about Ichimoku, then any general discussion, introduce yourself to us, and feedback, and we have weekly inspiration and devotional. That's going to help you guys. Basically, we have that weekly inspiration because a lot of times traders need inspiration to start the week, and it's not just about trading, it's just about life in general, basically. So we just want to be a family here, have fun. So you guys could come in here and join this for free, and it's really good. Now, if you want to become part of the home course, you can join the home course by going to fxatOneGlance.com and click the link where it says Ichimoku Home Video Course. And when you do that, that'll take you here. And guys, you can get in this course for a lifetime membership for $250 for a one-time fee of $250. You select that and you'll be a lifetime member. Anything I do or add, or you know, if I have a trading live trading room, you don't have to pay anything. You'll be part of that already. So anything I do, you're going to be a part of that just with this lifetime membership. Plus you'll get the home video course, and you'll be into that section here. That'll take you, if you enter that, that'll take you to the form here. This part of the form below this section here is the home video course. So there's going to be another section like this that's not going to that you don't see here. This is the free section. If you join the course, it takes you to another section where all the videos are and everything, and you can watch the videos and take your tests. And you have to take your test and pass your test in order to move on in the course. So I'm trying to make sure I help guys out, help you all out, and make sure that you're successful. So guys, that's pretty much it. That's the end of this, and hopefully guys you learned something. And if you have any questions, just send me an email, chaostrader63 at fxatOneGlance.com, or just come and join the forum and start learning some of this Ichimoku. Hopefully this helped you guys out, and till next time, God bless. So long.